Hello, and thank you for tuning in to this week's MacDesk Floor Report. I'm Rebecca Darst from the Market Access Center, speaking to you from the floor of the New York Stock Exchange, as we do each and every Thursday. As we come to you this December 27th, 2012, our last floor report of the year, it is getting ugly down here on the floor. We're down about 124 points in the Dow. That's just about 14 S&P points, and a fourth straight move lower for the major indices. The culprits are not going to be any great surprise here today. We've got a toxic triple whammy of fiscal cliff concerns keeping buyers out of the market. We've got overall equity volumes running about 25% below the level we would expect for this time of day due to light holiday week activity, and technical weakness in the S&P, amplifying the magnitude of the low volume downside move and bringing some momentum sellers into the mix. So before we look at where the market may be headed next week, let's quickly recap the global market setup that brought us to this point. Asia Pacific indices were mostly higher overnight. Once again, leadership came out of Japan's Nikkei as the BOJ stimulus story continues to lure investors, and the Japanese yen continuing to trade at 2+ year lows against the US dollar. Keep an eye on that dollar-yen trade as we roll over into the new year. Lots of catalysts for that trade. European stocks closed mostly higher overnight with not a lot of data points for the market to digest. French consumer confidence and Italian business confidence numbers came in a little better than market consensus early this morning. Both of these data points, however, helped the euro to trade near an 8-month high against the dollar. Germany's DAX also closed in higher territory, bringing it one day and about 20 points closer to its best yearly finish since 2003. Bloomberg had a great write-up on the DAX this morning, with their estimates pointing to a strong possibility that the German index will become the first Eurozone market to beat its 2007 earnings peak in 2013. Here in the U.S., ahead of the bell, we had the latest read on weekly jobless claims, which showed a decline of 12,000 new claims to 350,000 last week. The Commerce Department released the November read on new home sales this morning. This showed a 4.4% increase in new sales month over month, a 15% increase measured year over year, and the highest read in more than 2 years. So these were fairly solid numbers, but at the top of the 10 a.m. hour, we had a troubling miss in December consumer confidence. Wall Street consensus for the consumer confidence number called for a reading of around 70. Instead, we came in at 65.1. This followed a November read of 71.5, with the 6-month outlook dropping from 80.9 to 66.5, pointing to consumer skittishness not just in the here and now, but also further out in the calendar. One big reason for this may be a lack of confidence in the good faith efforts of our elected representatives to reach a fiscal budget compromise. Comments circulated this morning from Senate Majority Leader Harry Reid on the floor of the Senate, speaking to a low likelihood of averting the so-called fiscal cliff. His remarks coincided on an intraday chart basis with that consumer confidence miss around 10 a.m. This pushed the S&P below its 50-day moving average of 1412.60. We're now around 1407, so there's a lot of technical weakness behind today's market action. This has the volatility index reading 4% higher on the session, bringing the VIX above a reading of 20 and its highest level in half a year. Taking a look at the action in SPY options, heaviest activity today has been in the January 4th weekly puts at the $141 strike. That's the at-the-money weekly put that expires on January 4th and speaks to investor bearishness over the next week as Capitol Hill dysfunction continues to make investors dyspeptic. Can we all just get along in 2013? So we'll be watching all the market action as it unfolds here on the Mac Desk over the week to come. In the meantime, this is Rebecca Darst from the Market Access Center signing off for the final floor report of 2012. Have a happy and healthy new year, and we'll see you back on the floor next week.